Hey, greetings. It is Tuesday and it's time for Macro to Micro Power Hour. A few minutes late, I apologize. I'm Samantha LaDuc, founder of LaDucTrading.com, and I am very glad to be joined by Jonathan Gibbons this afternoon in regards to talking about volatility. Is it lurking still? Kind of a catchy little phrase here from liquid to gas. It's basically a play on liquidity to market vapors. Are we going to have some risk coming in? So let's just get Jonathan here, and I will invite you to panelist and do this little stop sharing so we can see each other's faces. Hold on. I also want to let you know that I have got this, thanks to James, my director of marketing, on a podcast. So you are welcome to check out Audible, Apple, Spotify for this podcast recording. Right after, I'll also be uploading it to my YouTube station, which is otherwise known as LaDuc Trading YouTube channel. So I have got little housekeeping out of the way, which is again YouTube, LaDuc channel, LaDuc Trading channel, also Spotify, Audible, or Apple. And I want to welcome Jonathan. Thank you so much for joining.
How's it going?
A little chaotic this afternoon, but really well. It's summer. I can already feel it, right? June, July, and August are just going to be a smattering of people, and if we get some volatility, it will be uh, felt by few because there'll be already exit stage left. That's how it feels.
um, I want to make sure it wasn't me. Did I hold up
No, no,
the
totally not
deal?
you.
Okay.
Totally right here. Guilty as charged. But this is really just grinding up to options expiration. So I wanted to kind of get your thoughts, if you will, on your gold trade because you have been pitching this for weeks, seeing the kind of optionality under the surface. And sure enough, I mean, it has just been a really strong trade. And now all of a sudden, everyone's noticing, which is exactly when it tops out. So
Mm, mm.
so catch us up because that was really, for me, a really big tell when, and I said this also a few weeks ago. I said, if we get gold, natural gas, and oil starting to run, volatility typically follows. So those are kind of like the laggard commodity plays that have really been sitting it out. And
Hmm.
natural gas has no fundamental reason to rise.
Yeah.
um, and the pipeline issue with Colonial had been resolved. Now there's potential talks of Iran nuclear deal, which is supply coming online. Sanctions, I should say sanctions potentially lifted and supply coming back online. I have a big question mark if that's really going to follow through. But nonetheless, we had a little pullback in oil today and nat gas, and with that, I just think everyone now finally noticing that gold is at a really key level at this sorry, this 174, 175 for GLD is exactly when it likely gets, uh, some pressure downward. At least that's the contrarian in me. What are you
Hmm.
seeing in option flow?
Nothing like that. Like I see underlying volume as massive in the space, and that security volume coming in, money flows are coming in, and optionality is like at the ask a lot and above ask and all call side, and there's some lot of spreads, a lot of call spreads. So you are seeing some calls that are like, definitely sales. And pairing those up looks like there's definitely spreads, but it's bullish, and these are ceiling levels that are like going back to 13, the massacre in 13 for a lot of the miners. When you take a look, especially a lot of the silver miners, that this is the level that's like, kind of flushed them all down the toilet back in the massacre of 13. And they've been in a strong ceiling for a long time at this level. So it came up to this level, it hit it last year, kind of got shot out of it, came back again, got shot out of it again. And here we are again at this level yet again. I have no macro right context to this, right, for this trade. I can't tell you I do. But what is fascinating is that it is sitting right at significant inflections. And I did a little tweet rant last night about it because I've been tracking this trade for a little bit just from what I've seen. And then to see it like do so in what, could be very like conflicting kind of signals environment when you got all these different other things going on. And it just really is, if these levels breach, there'll be a serious chase because there's no volume to stop these prices from just magneting significantly higher, like GDXJ, like 45, 50% higher, and just filling voids. If they're going to get rejected, they're going to get rejected right here. But I'm not seeing any. I was very curious about that today because I said that last night. I was like, man, let's see what happens today, and see if there's any kind of counter trade put on today. And there wasn't. Everybody came in. It immediately at the open, that sector got sold, and then it got bought, and it got bought heavy. And I go back to I guess the only thing macro I could say is that gold's really a part of the banking system. And so it's kind of a security at the end of the day that plays in that context. The miners are real cash flow positive, very cash flow positive. And so they sit in that value structure that you've been talking about for a long time. And, as they rotate, they're producing cash flow and the assets increasing, right? So it's like, is it any more complex than that? I don't know, but seems like people want it. And if it is going to reject, it would reject here. And if it does reject here, which I wouldn't be surprised if it did first attempt. Well, I say that this is the third attempt at some of these levels for look at silver as an example. This is a third attempt at this ceiling level. And there's some real chop up to, if you look at SLV from here to 3250. So it could chop in here, but if it does reject, I think there'll probably be a bid. I think that this is like one of those things that's got a lot of different factors to it from a narrative perspective. But if I just look at the actual auction data, it just looks real bullish, like real bullish. I'm not seeing like rising price and declining volume, or rising price and declining money flow, or a rising price and puts. I'm seeing rising price, call buying, gammas very much in charge at the moment, rising price with security volume inflows, rising price with money flows. So could it be that time where all the gold bugs get to go do their crypto dance, right?
Mm-hmm.
Maybe. I'm not going to say that it's not. I think that, and I think if it does, these are some serious breach levels that could really go to that 1970s style action that you saw where it just ran hot. In the 70s. So I don't know.
We talked about that last week. In fact, the 1970s style inflation, and there are parallels, to 1940s as well. But this was a chart that I just pulled up in regards to my macro read, which is just gold and real rates. So Fidelity, love this, put this out. Market suspects that the Fed might ignore inflation creep, which pretty much is what they are doing, at least until Jackson Hole. There are some mega bullish, or I should say hawkish, Fed interest rate bets in the interest rate market and Eurodollar market. That basically implies that they're going to do or say something come August or September, but not until then. In the meantime, it has pushed real rates further negative, and gold loves negative real rates. So that's one thing. The other is this lovely Bitcoin to you gotta do it. This Bitcoin to gold trade, check it out. So we got the boomer gold, right? And the Gen X, Bitcoin trade. And honestly, I just think there is some fun here doing this correlation, maybe not causation, but whether you're macro based, which is negative real rates, or your Bitcoin to gold inverse, right? Because dollar right now is not doing anything to really make the world go round. That's an argument. And I would also add, and I just put this actually today for clients, which was in my Slack channel, and basically said, here's my thing on crypto as it relates to this lovely Bitcoin and gold trade, and in particular Bitcoin, because we got to talk about it. And I've got Scott Melker of Wolf of All Streets on this Thursday for my macro to micro power hour. We're going to talk about crypto, of course. But I love when Tyler Neville, I think it was this week, can't remember. Anyway, he wrote in Blockworks this Bitcoin framing, right? So if your fundamental thesis for owning Bitcoin is that we are in a sovereign debt bubble and that U.S. debt to GDP is close to 130% and will have to print fiat until the cows come home, then you should hide. You should hold on for dear life. Hodl.
Yeah.
I call it hold on for dear life. If you believe Bitcoin will be a 21st century store of value, then you should hold on for dear life. But if your thesis is that Bitcoin is a new technology that is disrupting currencies like Tesla is disrupting cars, then you are likely selling. And if you bought Bitcoin because you made a lot of money off of buying SPACs and IPOs and all those other nonprofit tech, then chances are you're selling too. To me, that's a little bit of what's, going on here. The Bitcoin fade and the gold uptick happens to correspond beautifully with negative real rates as inflation runs faster than nominal yields.
Very much could be.
And you're seeing it obviously in flow. So what are you seeing? Like, show us.
Okay. I'm disabled at the moment from the sharing, so you gotta.
I will fix that.
It's Zoom protecting us all from ourselves.
Oh yeah, that would be get my butt in the chair on time. Okay, so go.
All right. Can everybody see mine?
Yes,
screen?
Perfect.
All right.
Wow, that's some size in silver and gold. Whoa.
Yeah. This is constant right here. Lately, like constant from a day in and day out basis. This is the aggregate, right, for each one of these, and this is a precious metals mix that I just keep. And then if you actually dig into silver, there's not even many contract strikes in the largest size that are even, puts are even outweighing. This is pretty consistent too. Then you throw into the actual, just take, GDX, for example, get a little bit of, put action, but not a lot. Most of it's call action. If I look at that and then kind of look at actual charts, and this is what I threw out last night, like I'll take a look at look at the juniors. SILJ, which is an index filled with all the junior miners, because I don't want to go through each one of them, right? Because it's like it'd be painful. You guys would be done with it after about 5 minutes. But like if you look at this got here back in August last year. It's almost a year. I mean, this is like textbook kind of purchase action, building a volume floor right here over in the market auction, like just textbook, and following along on the big pivot trend line. And this is the ceiling, like above this ceiling right here, above $17.50, $18, just in the auction, just auction, not macro or anything like that, just auction. It gets really like limited to the ceiling side. So like I can't even go back to like 12. I don't even think this thing had a 12, but it starts to run. If you look at GDXJ, same thing, right? Same exact thing. You can take this back, and the first marker in the sand is $75. We haven't been to these levels in 8 years. So this is inflationary type action for sure, like from a narrative perspective. But then you just look at the auction, right? And the auction is wildly bullish overall. Now, I mean, in the short term period, like I do see a little bit of like momentum could be tapping out a little bit, and there's some little bit of ceiling resistance here at 57 for like GDXJ. But if you look at SLV, like SLV has very limited ceiling, right? I mean, we're talking about 3 or 4%, and it runs hot, and the flows have been positive for weeks, almost 6 to 8 weeks underneath, and then steadily rising. So it's not like it's a flash in the pan either. This seems to be slow and steady and pretty consistent. And most days are down and then bought, a lot of wicking candles. So I think that when you look at the flow, and then you look at the overall, like if I reset it, look at the actual overall as a whole, like let's jump into the tree. Like I mentioned that I didn't see silver and gold in here a lot for a long time. And in the last week or 2 weeks,
Really? I was seeing silver and gold in here on a daily basis back in the top 50 of everything traded. And I'm not seeing, and then GDX and SLV have been in the top call structures on a scan basis on a regular basis. So just looking at the top, 150, 200, there's SLV today, particular strike. So these are the largest in the market, right? The largest on a rolling 10-day average of particular strikes. And so you can dig into what's inside that strike a little bit, but because it could be a spread or it could be just a naked call. But, most of these have been naked calls. Like there's been a couple spreads, so a couple portions of the spread. So when you see when I see it like that, like when I actually see it on a regular basis like that, it's pretty telling. I mean, this is the whole space, right? That's just, you can fight this all you want to from a macro perspective, right? From a narrative perspective. But if at the end of the day, the bulk of the participants are pushing it to levels that are going to breach like this, I mean, this has to fail here. If this doesn't fail here, then you could see a pretty significant little squeeze up to 28. If it doesn't fail there, then the last stand is at 32, 33. And I mean, I don't expect this to happen overnight. These are long-term, many year periods, but you're starting to see a different trend change over here. And this has been lying in the weeds for a while. Like, real focus has been on crypto, real focus has been on markets, but I don't know. And I read something very interesting that I think probably be worth sharing is like that there's still a housing shortage, and the Fed's really pays a lot of attention to housing. And so interest rates, and I think you've talked about, Barton stuff about the crowding out and so forth, and the way they deal with mortgage-backed securities are a real driver of what the Fed does. Mm-hmm. So, if they want to continue to keep housing pushing, and they just say screw it with inflation, negative real yields, right? Like, and they don't do what everybody thinks they should do, and they curb check it at all. I think that you're seeing the way people think they should probably play this, right? And I think you're seeing a little bit of positioning in the VIX change, because I'm seeing VIX start to be a little bit more. Well, what if you get a rising VIX, static or flat rising market, and then you get a lot of inflationary pressure? You could see that. I could see that. Now, I don't know exactly what that entails or means from a deep perspective, but from just an market action perspective, that's what I'm seeing. They've been really solid trades, right? Like really solid trades. And I think that you got to watch those ceilings. That if they burst, like you're talking like 40, 50% moves pretty quick.
Yeah. So we talked about that with oil, right? So if it breaks $68,
same things going on with oil. Chevron and Marathon were the largest yesterday across the board, just massive call volume.
Really? Okay, didn't know that.
Oh yeah, okay. Marathon and Chevron, and
like
they're sitting right. I didn't look at it. It was lazy look. That was just me looking at them real quick at the end of the day. But like, if you look at their charts, these are weekly charts that like are at real levels that if they burst, you're gonna get real hot. Yeah, they'll get real hot. Price will get chased. So it would have to be rejected very quickly. Because these are long-term levels on those that are approaching. So I'm like, you watch participants, and participants in size are like taking old school bets on inflation, and they're sitting there. So do they think it's going to run hotter? Maybe, right? Unless this just caps right here, and then I'd like to see the reaction. That's my take on it. I'm sticking to it. I don't know, the deep narrative on that. I know the VIX is like bothering me a little bit too, because it's starting to show a positive ratio, and the flows have been positive into the ETNs. And I know some folks talk about you can't chart ETNs or whatever. I'm just looking at flows, right? Like just looking at flows like of that stuff and how it relates to the way that people short. It looks like the shorts are starting to step back, right? So it's more balanced, if not call focused on the ETNs, UVXY and VXX, definitely, and then you look at VIX itself is definitely, call side. If VIX doesn't get crushed right here, it would need to get crushed and then, push forward. Then you could have like a VIX start to rise even if the market was flat. I'm really watching IWM too. IWM is at a huge important level that if it doesn't breach, that thing can run hot, because all those names inside of it are kind of washed out, and they're just do at least a dead cat type bounce, right? And so, that IWM, the VIX, are really important, I think, on kind of the macro level for me, and then watching that gold trade, because the gold trade meaningful. Like, it's pretty meaningful, especially with the crypto trade getting really licked right now. Like that doesn't look good. That trade doesn't look good.
All right, so we'll start at the beginning. So the crypto, when the coin IPO went live on 4/14, it was a really nice fade in the Bitcoin underlying as well as the proxies, and it still is. There is, potential bounce candidate here, but price target of 40,000 is pretty straightforward. It's like the 50-day. It bounces, maybe it gets as high as 51, rolls over again. It can go as low easily to that 20,000 mark, which is the 200-day. So that is all its own little asset class. We'll really find out what the buyers of Bitcoin decide what to do when and if it reaches that 200-day, because a lot of them were coming in late, right? They were coming in hot last year, opening up their trading accounts, and rode this, and were very, very excited, still buying up at the 50, 55, 60, $65,000 level, and now they're sitting on losses, the ones that came, first out, if you will. And if they're again, those who really believe in this whole concept long term, that's one thing. But those who have it on their balance sheet, the Teslas and the MicroStrategy and the Mara and the Riot and such, they're going to be really baptized, if you will. We'll really see if they'll hold on if this comes back down to the 200-day or takes out the 200-day. But it is very convenient, right, that it definitely faded as gold picks up. When I look at the gold trade in particular, and small caps and VIX, because I want to do my equivalent on that, I'm just going to GLD and silver and miners and kind of retail stuff. I can show the gold on a monthly. It's bifurcated right now. So it has diverged from bonds. Bonds had definitely, let me just do I'm on the right chart. Okay. This is just a weekly, daily, but just to kind of give an idea. We bounced off the 100 week. We did a really good job of getting back inside the Keltner channel. We had one trend line. We got above. We reached some, pretty strong weekly resistance moving averages, came back down, but this is the 10-week, and I have a very basic premise. Above the 10-week, it's bullish. Below, it's bearish. So obviously, it's done a really good job of moving higher, but we're right into a Keltner channel, and it's exactly here where I'm starting to say this is when everyone's starting to notice, and this happens to be 174 for GLD is quarterly. So we've definitely done a really good job of coming off this double bottom. Again, negative real rates are picking up because inflation is moving faster than nominal yields. And then we also have the Bitcoin fade from middle of April, $20,000 fade. So it's a significant one with all the tech stuff, the non-profitable tech plays also falling. So this looks really good, and yet I still think it's due for a test. If I, however, pull back in time and really look at this is a monthly, right? We're only the middle of May, but you get the concept, right? You can see this stunning, scoop, pull back, and everyone now on a monthly, those who are trend traders, really are excited because this looks very much like a cup and handle. So there's a macro trade for this. There's also a technical trade for this. There's a Bitcoin correlation or inverse trade for this. Dollar, by the way, continues to fade. This definitely looks bullish. We have to confirm, though. There's some work here. I don't think it's going to be so straightforward. But when I go and I kind of do my intern market analysis stuff, I'm still an inflationista, meaning I'm still bullish commodities. This is the whole trade, if you will, of commodities breaking out on a monthly. Inflation is still strong. And I had mentioned, I think if gold starts to pick up, we have some concerns that volatility is also going to pick up. So I am still of the camp that gold is actually the tell. The hotter it runs, the more likely we are to have some volatility. And that particular chart I kind of update on a regular basis, if I can find it real quick. I'll do small caps, and then that volatility trade is my nicey. Where the heck is it? Hold on. Inflation, inflation, inflation. Oh, come on. Here it is. All right, it's still here, right? So we've had a little bit of a bounce. This is last week, by the way, on Wednesday. And you know what happened? Thursday, we hit the low. And my advice to clients was, okay, this is the low. Into the week of options expiration is typically bullish. And so far, we've had this, Friday, Monday, Tuesday, and then at the end of the day, we tanked. So this is the danger, where we actually start to roll over, and gold is almost like smelling it. We need a hedge, and it's starting to really get weak. I also thought it was fascinating in this little week that we had not too long ago. We got outside on a daily. SPX went outside the Bollinger Band, snapped back below the Bollinger Band. Can you see this? For those who are technical, we know what that means. It's like a 3 standard deviation move very quickly, and now we've gone right back inside. But that resulted in a VIX move of 40%. 3 days, 40%. We've come all the way back, right? We've filled that gap. Now it's time to kind of reload. So I still think you can play the whole VIX movement higher, and gold is basically a hedge. Gold is just serving as lots and lots of reasons right now to get support, but this is still massive as it relates to the bullish bearish thesis. If we can close above 174, we can definitely move higher, but I think it's more likely we get some digestion.
I agree with that. I think
But you have bullish optionality all the way. You don't see anything sizable that says they're starting to pause, because you've been talking about this 4 weeks. It's been building and building and building.
No, there's nothing today. I mean, it doesn't mean there won't be tomorrow, right, or the next day. But there, as of today, I don't see anything. I think that, like, when you think about it in size, right, like, you're running out of places to go, right? And if you do think there might be risk off, the only problem with gold is, like, it is old Marge, right? She can call you and hit you up on some margin calls, right? At the end of the day, if you do see a sell off. So if you see a sell off and you get liquidity issues in general, then gold can get pulled back. So that might be a component to a pullback here, right, as it relates to that complex, because there's nothing really negative about the complex unless you get a sell-off in the market, which drags it just by proxy. That may be something that you could look for. I've seen it 1,000 times, where gold looks really good, gold gets hit with the rest of the market, and gold keeps going. So especially in the last little while, I don't disagree with you at all.
Well, there's a timing for this, right? So we're gonna find out if it really is correlated to this Bitcoin trade, because right now yields have been going just nowhere fast, right? We've been sideways for a few months, relatively speaking. We're in a channel. I'm talking about the 10-year. We've just been, that bull steepener that we had flattened. It's thinking about going higher. It's thinking about going lower. It's really not sure. So there's no trade. But Bitcoin has been pretty clear, right? So here's this 65,000. We drew down, and then we bounced a little bit, but that's a lower high. And then we, of course, just rolled over. So it wouldn't surprise me if we come down here and we tag, obviously, this 200 and bounce. I'll wait to see if gold can hold up, even with a Bitcoin bounce. Does that make sense?
Yeah, I don't know. Yeah, totally. Yeah, it makes sense. I don't know how correlated they are. Like,
well,
personally,
right now, this is why I brought this chart up. It was kind of interesting. The Bitcoin and the gold seem to be a little bit inversely related. So I'm gonna go on that thesis that we might get a little bit of a bounce coming up in Bitcoin at the 200-day, and with it, gold has a little bit of a pullback, to be determined. But it's coming.
Yeah,
it's gonna come soon.
Yeah, well, I mean, we'll see. We'll see. I think that, especially, like, how I put it, you look at Bitcoin. If you pull that Bitcoin chart back up again, it's really on nowhere since February, right? Like, and one of the things that's happening in that space right now, and I don't think anything negative in the crypto space as a whole, personally. So much adoption. So, like, it's long term pretty bullish, but, like, this has gone nowhere since February, right? We're at 42. We're
in the beginning of January. We're at 42
No,
now.
I think this was
Right.
gorgeous from October until it broke. I mean, this has been a really solid level of support, and now it's resistance, and now this is going to become support. So I know what you mean. Like relatively, if you got in here, you're even. It's kind of like the ARC funds. They had a huge inflow from November, right? And 55% of assets under management in ARC actually came in from November. It was ginormous. They're now underwater. So it's the same idea if they came in here and got excited. But relatively, this still has a gorgeous, this is a gorgeous trading vehicle in my opinion. Not
Well,
just.
if you look at this like just from a kind of a total market structure standpoint, like where I look at like it was really hot up in the 42, right? And then since then it's been chased on lower and lower and lower and declining volumes. So suckers buying it up from 42 to 65, and they got cleaned out real quick. That's why it moved, 15 to 30 days, all those 3 or 4 months action just got wiped out because those people all bag holding, right? So now you're sitting down there at 42 and you're going to find out if there's real demand, because it really needs to hold right here between 42 and 32. And I mentioned that to a couple people. If you've really got long-term demand, or if this thing has gotten a little, because you see a lot of infighting in the space. Like Musk came out and said,
They're getting nasty.
I don't know. And the infighting in the space is for real. Like, so Musk says, yeah, how can you hold it? Because it's so concentrated. I traded it effectively, right? He wants to run with Doji, right? So he's picked his horse, right?
Yeah.
And you got guys that are saying, well, if we get non-adoption, then it was because of this. Well, why are you saying that? Like, why are you saying if we get non-adoption all of a sudden? You weren't saying that $20,000 ago, right? So this is a dicey setup here, because this has got to hold, because there was no transactional back and forth between 12,000 and 32,000, right? It was a one-way street. And if it gets down into that, right, bulls don't want any part of that, because that's going to flip up on side. It's going to flip on itself, and it's just going to eat itself, because all the volume profiles are sitting on top of that. So they'll just sell it out. And I think the competition from Ethereum, right, and the competition from Doji really do matter to Bitcoin right now, as much as people don't admit it. And so I'm very curious to see that, and all these other just crazy nonsense coins. Robinhood has delivered Doji, right? They're one of the largest deliver. I mean, so it's not like, back when Bitcoin was running hot, that wasn't even really pushing hot, right? So you got people that are buying it. And I think that, long story short, I think that the actual competition inside of the crypto space is actually harming it to an extent at the moment. And it's taking away from a singular runaway type move that has exhibited. So, and that's a really great point. And Musk said that, Bitcoin is only, circulation is constant, very, very, very highly concentrated. So I think if you think that, like, if you think that it can turn and run nicely, then that is really predicated on the hold, no hold at 42 and change, what you're talking about, at that supply zone. You could probably even breach that and get into the 30s. I'm sure there would be a lot of Bitcoin is dead posts with a 3 handle, right? With a 30,900 handle. It's going to be dead soon. And that would probably be where if you were a whale, you would let stops get run and you would then pick it up right there. So I think that area right there is definitely spot on to what you're talking about. If it's going to turn, if it doesn't turn there, right, or it stays there for too long, then you run the risk to get smoked again, right? Because if people have sold and they're not coming back, and there is rotation, and people like Ethereum's business case better, or et cetera, you don't want to get into those levels. And you don't want to get into you definitely don't want to get into the 30s, and definitely don't want to get into the 20s. That'd be bad stuff, right?
Well,
for that.
Yeah, this was basically the same concept, but some particulars, kind of going a little bit farther, that those who were momentum chasing, which was nearly all the new accounts that opened up in the past year, all new young traders, and they were very excited, right? They went long SPACs. That was a new asset class, and all that issuance, new IPOs. You know, and again, a lot of them were hyper growth, no revenue, no earnings, no dividend plays that were making tons of cash. All the crypto space, the EV space, basically the commodity craze of Bitcoin that started last summer, and they rode it to 65, just like you said, now 45. If they disappear, this is also a really good tell for volatility coming in, because they're going to have to sell margin calls, things that are more liquid. To me, this is where it starts to kick in and get a little bit more dangerous. Right now, the indices look like a very solid, nice roll is on its way.
Distribution, yeah.
Yes, they're in distribution under the surface. We talk about that, but they're quick, right? That volatility for 3 days that went up 40% in 3 days. And it was basically the standard deviation move. And again, just whatever, at 3 o'clock, we rolled over hard, wallop, and it was, you know, after the oil drop on, you know, potential news of nuclear power, nuclear deal with Iran, you know, getting an announcement tomorrow, all speculation. But you're right, since all this non-profitable tech bubble stuff burst in February, and that includes cannabis, China, solar, etc., now you have the inflation thesis gaining a mainstream momentum. Cost of labor, $15 is now going to be the floor, right? Bank of America is actually going to be offering $25 an hour to attract employees. So the cost of capital is rising with higher nominal yields. The cost of labor is real, and it's, you know, getting bid up in competition. And I just think this is definitely more volatility tailwind than headwind. And then you have digital assets, which are supposed to save us from a debasement event, also getting sold. This is, in my opinion, many traders have become investors by default, not design, because of the Bitcoin fade and the hyper-tech fade. And they're now thinking, or now regretful thinking, non-profitable tech equals Bitcoin. So the hold on for dear life Bitcoin hodlers are not going to go away. They're like MicroStrategy. They are averaging in at a cost of 24,000, right? So what happens if that 200-day gets breached and it collapses down to 24,000? I think a lot of people are going to be like, come to Jesus moment.
The same thing happened in 1999 at MicroStrategy.
Basically, oh my God, you're right. Okay, and on the other hand, there are those who are, again, you know, this is going to be a transactional, transformational, you know, asset and platform, both for institutions and for transactions, that will be like the internet in 1999. But we're a little bit more cautious. We're doing the comparison, and we're saying there are lots of reasons for this to pull back, and gold is clearly getting supported now. We'll see what happens at that 200-day bounce with Bitcoin and gold. But I wanted to ask, because you have been a huge proponent of this gold and miner and silver trade, because you could see the option flow coming in hot and heavy, and it's still strong, even though I see a little bit of pause right now, or at least technically it should.
What you got,
it wants.
Yeah, what you got is a technical level that's
Yes.
a trigger, right?
Yes.
100% agree. And that level is very clear in the structure. And I would say that the volume point of control is on most every one of those charts on a daily period and even a weekly period underneath price. So price has a huge volume floor. So even on a pullback, like you're gonna have to chew that out, which is the inverse on a lot of some of this other stuff we're talking about, where the volume's now sitting on its head. And so price has to have a really good volume move to get through that type of ceiling, because you got too many people that were sell side that are still sitting there ready to sell into it. And a lot of those names in the Russell, the Momo names and all that stuff are all looking like that. No matter if there's a bounce or not, they're sitting underneath the heaviest volume in the market. And I think that one thing I was going to mention a second ago is that the 40% VIX move. One thing I want to mention is that the intraday action as it relates to these types of moves, and to be thinking about that as you're trading, because once these things set in on the day, they don't stop. And so getting a VIX move of 40% in 3 days, I think is much more normal once you get this stuff actually starting to shake the tree a little bit, because once the day sets in, past 10:15, watch 10:15 about every day. That's the optionality for the morning is cleared. And it's very hard to fight that trend for the rest of the day after 10:15. And you saw that where VIX spiked.
Interesting.
It spikes, okay, and then it stays. And if it holds past 10:15, let's say 10:30, then you've got a trending day. And that just continues to get bought, right? And so PC ratios will flip and you get tons of index purchasing on the put side, which is going to make sure the VIX stays bid just from a technical, mechanical perspective, okay? So that doesn't allow it to be coming back, which is why you see a huge standard deviation move. So these indexes are very susceptible to that, right, at this point, and very susceptible to that change, especially when the short sellers are not as much available. What I would tell you also that I'm seeing is that you got to watch the underlying stocks inside the index. So if you see that last week, you know, the index itself was getting heavy puts, it flipped, VIX spiked, but the stocks still were getting purchased. Okay, and the stocks, as it relates to options contracts, were still getting purchased. Those are conflicting currents, right? So the stocks themselves are still buoying, even though the index as a whole is being purchased. So the index isn't driving the stocks; it's just kind of mooting out, right? So the index bounces and levels off. I've seen a little bit of the stocks flattening out a little bit, and that's that single stock gamma, right, effect to a degree. So I think that, like, if you watch for like a VIX move that could really stick more long term, the individual names have to at least turn net neutral. And what I mean by that is they're not being purchased overwhelmingly, right? Because people, if you think about the way the market works, most people are buyers, right? Most people are buyers. They're not sellers. So that really does play into the way that this stuff happens. So I think when you look at the VIX, you look at the spike, and you look at where the indexes are, they're very distributive. I don't think the indexes have been positive, in my opinion, for quite some time, maybe 3 weeks. They're very neutral every day from our side, from the option side and from the flow side. So, you know, the setup is there for the stuff to roll. What sticks it is like a VIX that pierces it for, you know, 3 to 4 to 5 days and closes the week. It's got to close the week out on a rage. And so that, you know, you always get an inverse effect on money, but where any type of pullback is now in a bullish trend, and people are fear has set in. So I think, like, you know, the coin guys, right, like that are in the macro, or excuse me, micro strategy, the Maras and all that stuff, those charts are broke. Just like Tesla's charts broke. And so they need like a major turn. What's going to give them that turn? I think, you know, not a lot. It's a sell side. What's fascinating is the inflation trade, the real inflation trade, which is the commodities, right? And then the miners is picking up steam, and it looks like it's going to get hot. It could get real hot. Like at these levels breached, I mean, it's just market structure. Just like I said, the VIX set in by 10:30, it's going to burn your all day, right? And then same thing with a spike, gap, ramp, and camp and hold. Don't short that all day. Good luck. Where literally the entire infrastructure of the market is just going to eat you up all day if you're trying to short that, right? So those dynamics play. And if the inflation trade runs, those dynamics will play. And if the deflation side hits in, that dynamic will play. And so I think that those things are really important to watch, you know, and then to see what levels stick or don't stick, right? Because the crypto stuff, you know, crypto is a tech trade. I don't believe that it's an actual, like, you know, US dollar situation.
Currency,
it's just
commodity.
It's like a tech trade,
or Armageddon, or tech trade. It's
a tech trade because it's really the infrastructure that you're betting on in the long term, the smart contracts, the things that it can do for payments, etc. You're not like, you know, it's too concentrated positions, right, to really be a US dollar hedge, right? I know people that like say that, but it's not really what it is at all. And so I'm not surprised that it's getting hit with tech. So I think that really goes back to circle back and answer my kind of like, I don't know about the gold, like direct correlation. I think from price structure right now, definitely they almost mirror image opposite, but like bigger picture, I just, Gold's a real inflation hedge. Silver's the realest inflation hedge for a long time. Oil is, housing has been, and as long as the Fed supports the mortgage market, continue to be, as much as it'll become so unaffordable, nobody can actually live in houses. There's to rent a fraction of one. They buy a fraction of Amazon, you can buy a fraction of a house. So I think that is much more, and that's why you see the major players like BlackRock and all these guys buying a bunch of houses, because they're just expecting real inflation, which would really torch tech trades, right? So Bitcoin's acting more like a tech trade to me. That's my 2 cents. I think it's just like a tech trade, and it's been a tech trade for a minute, and it was like the last of the tech trades to have some gas. Now I think a lot of those could bounce, but I do think that they're in deep trouble.
So the volatility that you track, okay, so we know that gold can be that kind of hedge with volatility, or gold sometimes is the new VIX when VIX isn't moving, but you've already spied that strong momentum into gold, silver, and miners. What are you seeing really consistently in the VIX trade?
It's no longer short.
Okay,
so the shorts
extremely bullish, but it's no longer short.
Correct, and it's almost bullish on a daily basis, but it's not like raging like you saw the other day, right? That's raging. But what you see in those raging days is a lot of hedging. So you're going to see huge contracts that are wildly bullish, and you get hedging into that, right? Which is natural.
Yep.
Very natural, because that's a hedging product. And so what I see is when the shorts, real smart shorts, will step off of it if it can get dicey. And what I also will tell you is, here, let me show you this. I start to see VIX. I got a couple of different things that I've written. This one is just all the index. So SPX, NDX, RUT, etc. These are the calls of the day that are driving the most volume, right, etc. When I see a lot of VIX in here, which is, let's say, half of it or more, usually I'm like, okay, got to note that, because it shouldn't be here, right? Especially when I go reference them and they're not called sales or spreads, they're actually naked, right? Which a lot of those are. And then I look at the, I'll get one more thing. Hold on. Deep calls out of the money. And when I look at the deep calls out of the money and I see VIX start to show up again, right? And these are two things that I've picked up on, let's say, the last 4 or 5 months. When you get little spikes, it's usually not too far along after I've seen deep out of the money calls start to roll in that are really, really kind of abnormal. That you go from nothing to somebody just takes a big stake in some deep out of the money calls. You look at them and they look at them and they're not sales, they're purchases, right? And so, and at the minimum spreads, those two things I see that are actually kind of one more thing into that the shorts come off, and I'm starting to see some deep out of the money calls, and then some larger calls in relation to SPX and the NDX and so forth, where the VIX is actually SPX is the largest thing, period. We should drive most of the call activity. When VIX is poking its head in there, meaningful. So I've seen that show up a couple times, and usually precursor to spikes. So I'm seeing it again, right? And that's what I was telling you. I saw some warning signs. I'm also seeing the shorts come off of the VIX. Not ragingly bullish. You don't see 50 Cent anywhere, right? I don't see him anywhere, right, where he's buying those 50 Cent ones. But I do see it. The room temperature is set for an explosive move to happen when the shorts aren't sitting on it, right? When shorts are sitting on the VIX, not really going to have anything happen, which is interesting, right? Because that usually is we all joke about it, but Jay Powell genuinely does not support volatility, and that is a notated enemy of the Federal Reserve. They don't want volatility. So if they're not by proxy supporting volatility suppression, which is notably true, then they probably don't care at the moment. Maybe they're letting a little air out of it, right? So nobody's there to stop a spike here is my long story short. You guys sat through like a 5-minute BS dissertation just now, but like long story short about my intraday trend going, after 10:15 is when the shorts are not there, right? To sit on it. It does spike. It sticks intraday, not overnight. These overnight things don't work because the market auction is going to try and reset quickly in the morning. If they stick intraday and you get a spike past about 10:30 and the shorts aren't there, you can get busy. And it got busy last week, 40%, 3 days, right? So, and a huge move in the index. And the index is not like strong right now. The SPX is neutral to bearish.
Well,
like
it wasn't
last 3 or
so
4 days.
strong. It was like 4%, drawdown in S&P, but a 40% move in VIX.
Yeah, because there's
Very
no,
notable.
yeah, there's no, that's a huge move with the intraday action that because there's nothing there to stop it. So again, it came back, which is interesting because in the ETNs, you actually have volume coming in to the buy side on the as a security. Those ETNs are terrible. They're decaying vehicles. They're made to go to zero. But like you could see volume coming in, which I noted last week. I was like, hey, if volume comes into the ETNs, right, as like actual purchasable type, that's hedging going on, right? Like the people are using it to hedge, and so they're hedging for something. So I think your distributive comment that the indexes have distributed, I think the Bitcoin is distributed. That the Dow is distributed, IWM is distributed. Doesn't mean that they're going to turn over, but table's set. I don't know if anybody's going to eat.
Well, I definitely see lots and lots of continued inflation impulses in my intermarket analysis, which is just totally geeky stuff that wouldn't make any sense to anybody. And then, of course, there's just the price action, which does make a lot of sense. And then anecdotally, labor costs and capital rising and shipping constraints, still supply, shipping, the whole thing. But gold had not served in any way, shape, or form as a hedge or as an inflation play whatsoever.
I know, right?
Until Bitcoin started to roll over. So that's my only kind of like push here, that I think at least from a trading standpoint, it totally separated from bonds because they have traded so well with bonds. In other words, really fractal, if you will, tight. And then they totally diverged when bonds has just continued to be weak to sideways. Gold has risen, and it is that inflation outrunning nominal yields. But I also I see the inflation impulses. I post that for clients all the time. And market aside, volatility is coming in. And when it starts to do these 40% spikes in 3 days, it starts to get that complacency tested. And that's really when we start to get bigger moves. So we start a little small, and then they, like you just said, you can see it stick, and the shorts don't come in. They don't believe it. So I'm curious. There is this chart that I kept showing, on the NYSE, the NYSE, which has an air pocket of risk down. What would you give probabilities in regards to a volatility move that could really move, not like a 3-day wonder, but like a 3-week wonder, like we had back in February, March? Any probabilities assigned to that type of reset?
I don't know. You're really putting me on the spot right now.
Well,
I'm just messing with you. I'm messing with you.
I mean, I'm curious because this to me is growing. This air pocket of risk to me is growing. The more we do this dance, and then we have this gyration of 40% move in 3 days in VIX, I'm like, these are the tremors. They're letting us know.
if the market's a big pot of money, right? Money is moving, right, to something right now. Where's it moving to? Oil, explorers, large cap oil, miners, large cap miners.
I keep showing this screen, but
right.
Just to answer that real quick, where is it flowing? Real money, big picture. This chart I have put up, SPX to CRB. This is basically my whole thesis in a graphical representation, from paper two things.
Yeah, totally. So like, if it's flowing,
1990s.
flowing, right?
Little pause right here in the oil inflation. Excuse me. The oil uh, what do you call it? Recession that we had from 2014 to 2016, and then we just take off again, right? And this is things, right? I'm sorry. This is paper. That really is outperforming things, and now we have things outperforming paper. I think this is where money is going.
Yeah, I totally agree. And when you look at that in the context of the whole flows, right, is they're moving. And so there's nothing sturdy underneath the paper, right, except for passive flows that go into it regardless. And so it's very susceptible to a volatility shock, right? So that increases the probability to me of it happening. Having said that, right, it's all about levels. So if a shock doesn't stick and a level isn't broken, then more of the same, right? Buy the dip, step in, etc. Because passive flows. If you do get a shock, then the shock's going to be serious again, and it's going to clean out levels because that's just the market that we have now on the paper side, right? Things will get hit, and they're not going to hit as bad as paper.
Things are getting hit, like
right?
the lumber trade, but this is such.
Yeah,
This is okay. This is not like broken. It's
no.
I mean,
That's going to reset around 1153, worst case 800, and it's going to keep rolling. So like
yes.
Yeah. So
and under the surface, just real quick, this is the NASI, which is Nasdaq McClellan summation. Remember, I've been waiting for this. Where here's the Nasdaq print. Here's the price, and underneath the surface, you can see the selling that's been going on. And that's not a good look. This is a catch down situation or a catch up, but it just continues to fade, like you're talking about the things.
Yeah, it's rotation, so there's nothing there underneath it if it gets hit, which is then the susceptibility that a shock, no shorts, right, or reduced shorts on the VIX, right, lead to a spike that sticks, breaks levels. Here we go, right, and that's it. And the other thing I'd say is like crypto became a lot of the market, right? The crypto related stocks started to get a lot of the carry, and they sucked lately. And then you got all the Momo stuff that's gotten whacked, but that do a bounce. So that stuff is bouncing, right? A little bit for a lot of those Momo trades. Yeah, they're bouncing.
Because we have tomorrow VIX expiration on Wednesday, and then the options for the month expire on Friday, and they typically do this, right? But that also, even the last hour, it's just like it's shaking.
I'd say my probability is that if a certain level, is breached, let me just look. I can give you a level real quick.
I still think we're going to roll over. I really do.
I'm not disagreeing. I'm just saying that at a certain level, like if you look at semis, right? Like if you look at semis, for example, like SMH, right? This is a perfect example. Here, I'll share my screen. Right. So this is semiconductors on a weekly, right? The flows are just falling apart.
Yep.
This level right here is 216. If 216 gets breached, real simple rule of thumb, you could get some selling into 175, right? And then testing down. Like if I looked at it on a daily basis, right, it's bounced back in, but the volume, as I noted, the volume, as you spend all this time here, it gets chewed through and price this starts to fade, then the bulk of the action is sell side. You've seen flows be negative for almost the entire month of May.
Yeah.
And then momentum is sat on the negative side right here. This has got to get back up over here, right? So if this does not get back up over 243, right? And just sheerly from a purchase standpoint, that means that the bulk of the transactions are now sitting on top of it. It's going to roll. If it rolls, then you're really looking at 184, right? Because there's nothing in here because there was no market action, right? So that goes back to that 217 level. So I'm just a levels guy. So like I would say if you get a real breach of a real level on the Qs or the semis, right, and it drags the SPY with it, because SPY is looking a lot more like really like, you know, meh. Like people aren't going to really get upset about the SPY, even down to 390 level, right? Like that would be like no concern. Like you get some VIX that's 7%, but like get underneath that, right? And you start to see some real action. So you asked me probabilities of a real action like last year, like March, I give in the 20 to 30 percentile, and the probabilities of a pullback to, 390, 75 percentile, right? There looks probably pretty realistic. And then if you had to say what's your outside, is just more crazy nonsense inflation that stimulated fiscal or something like that. It comes in at the first VIX day down, that immediately comes back, and then we're going back to new highs again, because it's like, yeah, it's just all funny money. So that can't be discounted in anybody's analysis anymore, right? That so I would say 25, 75, okay. Right? 25, you could get a 35% drop. 70%, you're going to at least see 7 to 10% correction, and then we need to see what happens around 380, 390. And then, 5% that they come in immediately with 19 Fed speakers and, a mini caucus, and right. And then Biden's doing another $2 trillion stimulus.
But I will say that there is a lot, and I mean huge whales coming in betting that interest rates are going higher, and to be announced, Jackson Hole, August timeframe. So, it's June, July might just be the foreplay for something.
CPI print June is a big marker.
Well, right? But it's lagging. Yeah. It represents May, and May should be still running hot.
Yeah, May's running hot. CPI is June 10th, right? So I think that's a big marker, and you can see, where it's like, oh shit moment, right? Like, we got a real problem, because now you got to remember how much stuff is marked to market. You and I sit here and we can make decisions. Prop traders can sit there and make decisions. Hedge funds can make decisions. Institutions can't make decisions without CYA, right? And CYA is these numbers, right? And so smart money, props, right? People like that, that control cash themselves, can make their own decisions. Yeah, they're front run, but like an institutional guy or lady cannot do something like, risk off, without some sort of I'm not going to get fired because look, it's inflation now, right? And so we need to adjust. And so that has to be that has to be considered into a little bit of the kind of avalanche or onslaught move. Right?
I don't know. I think the market is very fun. Like this game today of making trading accounts available for teenagers. Did you see that? That was kind of the hubbub of late.
I didn't. Yeah.
Yeah. So your comment, Curtis saying, Jonathan, that's an excellent point. Have you heard of institutional real estate owners offering share slices or rooms for rent of homes yet? So, and now the running joke is Robinhood will now extend trading for the 7 to 12-year-olds. But the point is that there is a lot of speculation that
it's too old. Get them younger, right? Get them at 5.
They still need buyers.
Oh man.
Anyway, but I just wanted to show this before we close, because I've realized it's 5:11. But risk events upcoming. I love this. Trader sent this to me out on her stream, and I just love this. Thank you, Pip. We've got definitely U.S. GDP gap coming up on 5/27. By the way, FOMC minutes tomorrow, but nothing is expected. So the GDP, if there's any disappointment in that growth trajectory, that would obviously set up some drawdown. But otherwise, this China PMI, it's been weak. The infrastructure bill probably already priced in. We got a lot of rate decisions coming up, which are expected to be tightening related. We've got Jackson Hole coming up. Nothing again is really expected this June or July. It's expected to be stronger or have to do something about this inflation move for August and then September. And who knows, SEC approving a Bitcoin ETF. Anyway, I just thought this overview was kind of cute. But otherwise, we definitely will, we'll come back next Tuesday and see what happens post options expiration. There is definitely some air pockets of risk below in the NYSE, and this sudden volatility that's coming in toward the end of the day, especially last week with VIX up 40%. To me, that just says distribution. And gold obviously is a tell for not just inflation, because it didn't run, right, for many months, but as risk. This hedging, I think it's more a really good play. Macro, real negative rates, Bitcoin fade, and also just good old-fashioned hedging for volatility in the markets. So good job, by the way, spying that for weeks and weeks and getting folks, to pay attention, because that has been a phenomenal, and I have been on the fence going, yeah, but. So
Yeah.
you had conviction. You had strong conviction. Good job.
The one thing I would say about it too is, like, even if that trade gets stopped here, I would watch the bounce, like the comeback on it, because it just all of the similar things that we've seen in every other sector for constant momentum movement is now appearing there, as well as gamma. And so it's all rules apply across all assets, right? So you're not going to discount this subset just because it's different. So I'm curious to see the pullback. That's kind of why, to me, it would line up with that. That's why I'm 75% like correction versus collapse, because the way that setup looks is, it looks like it could come back in kind of just a risk off environment that then is bought again.
Yes.
Right. For and is it just, then that's where it breaches and just gone.
And,
It's
and
gone.
Peter makes a good point. He says some of those young traders actually have to go back to work now. Businesses are beginning to normalize. And I would also contend, keep your eyes on the airline sector. They're really looking like they could remove the travel bans and we could take to the skies again. And summer is here. People are just eager to move. But anyway, his comment was, one might argue that the speculative fever is close to breaking. One, because they have losses, and two, because they need to actually get up off the couch or from their gaming.
Well, let me say this too about that. Like, one of the things that we've found just in our own research and so forth for different things is that you've got, Robinhood has almost 22 million traders now. A year ago it was 13, and
Coinbase has twice that.
Yeah, so you're talking about
more than that, 56 million.
So many people participating in the markets.
Yeah.
And I heard like that, it was a joke about the kids getting involved and stuff like that. They're putting the stuff in schools, teaching people about money. It's all a good thing. They shouldn't teach them to YOLO, but teaching about money is one of the best things we could do as a society.
I did in my kids' elementary, 5th grade, they asked me to come in and talk about stock trading. And then I did it again in their middle school. Do your homework was kind of the idea. But yes, I think it's good to instill it. But opening up account at
YOLO, that's a different story. So like, I think that, but one of the things I wanted to point out, just from a discounting perspective, I wouldn't discount that these guys are going to get wiped out. You had Fuel Cell, you had Fubu or Futu, right? Like you got the Fubo, which is the TV one, like all those things. These things have already been like stomped on. Clove, IPO, like all that stuff, 60, 70% down. Those things have already been trashed, and they're still trading, and people are still trading Bitcoin, and there's more people coming in every day. One of the things I would say is, a lot of people are getting washed out. There's even more people coming in, like in a constant basis. So there's a little bit of new market dynamic that has got to be kind of accounted for, which then kind of goes to bullish these, because they'll see, if I'm chasing what's hot, then I'm just gonna, I might rotate over here. These people aren't stupid. And so they're gonna rotate to what is hot. Hence, AMC is reopening again. AMC was getting bought again, and AMC didn't look that bad yesterday when I looked at it. Like, it's just not as I don't think they're going to get I don't think that is the overhang. I think it's actually almost supportive of liquidity.
I think that what is the overhang is the one time frame indiscriminate passive indexation that is so fragile to the market structure because of the way that the VIX is set up and the way that these things get taken out and how quickly they get body bagged. And I think that's the real risk in the market, not the Robinhood traders.
Well, I have to go to
you know,
one more level. That is leverage is the real risk.
Yeah.
And I'm showing a chart right here of margin, and this is U.S. margin debt in billions through
and
April.
this is not a Robinhood trader.
No.
This is a pension holder or a 401k holder or a retail account holder that's got a retirement account that has totally been rewarded for taking on 2 times leverage, right? And
More than
has
2.
had no issues, right? Has no
Tiger
issue.
Cub. So
That's size. That's size. Size affects the market.
Yeah.
Small lots don't affect the market.
This to me is that one argument where everyone's like, Fed won't let it crash. The traders won't let it crash. The institutions won't let it crash. If this starts to come down, Archegos was wiped out, right? $2 billion in 2 days. And it is only a risk, by the way, when it starts to reverse. But this is something you have to keep in the back of their mind if you are long with a portfolio. There's just nothing else that matters when an unwind occurs. So this does, I think, need to be a nice caveat, a way to end it where we could go from liquidity to vapor on this one chart alone.
Yeah, well, and then you figure that there is no interest. You've got to get 5%, and the HYGs replaced the CD in the United States. And so their certificate of deposit is now totally been replaced by high yield grade bonds. Yes. And so, this is like, you take that off the table too. And I used to watch bonds as a front run for market kind of turmoil, right? And you can't catch that now because it's just basically a government-backed security. And so, almost like a certificate of deposit, the way that the Fed is the largest shareholder of high yield grade. And so I think,
really techie, here's the risk parity, which is that portfolio stock, balance to kind of track, like you're saying.
Totally. So.
All right. So we'll see what happens. We'll touch base next Tuesday, see what we have after the options, the monthly expiration. And then I really think we're going to be just, June sets up for a quiet, usually July and August. And Bitcoin, we'll see if it holds that 40,000 area. Otherwise, it's going to see 20, and we'll really find out if the hodlers are long and strong.
The guy's question is, what's the likelihood of a Bitcoin at $1?
No, yeah. I hope not. There's way too much invested in it.
No, it's a systemic product now, so I don't see that.
But anyway, so thank you very, very much for attending. And on Thursday, I do have crypto guru Scott Melker, Wolf of all.
Yeah, great catch there.
Following he's got. I mean, he is a rabid beast of all things crypto. 400,000 followers on Twitter. Very accessible. So bring your questions because I think I follow 4 of the 5,200 coins. I'm serious. I've got 4. I'm really good with 4. So this is not my wheelhouse. I need help.
This is great because these are the type of folks that can shed light on they're specialists in these spaces, and that's really great because it helps shed light on how they are seeing it, from the inside as being really involved in it. So it's just great trade.
When do you get Bitcoin on the VigTech platform? Because that is just going to be gobbled up. And
we're looking at the exchange side of that too. So not, the whole side of it. So not just maybe the data, but all that good stuff counts and so forth. So, I'm in the camp of it. This is something that's, it's definitely a long-term thing. I don't know I've said it many times, I think it's a big trend and smart contracts and self-clearing is a big deal. And we definitely want to be a part of it. So, I don't know I'm not sure about some of these coins, that
No,
I'm seeing out there nowadays, right? Especially with the, not safe for work names of some of these things. So like,
by the way, for those who are interested, stock, I think this is pretty cool. Stock charts, this is where I keep all my intermarket analysis, right, that I show. They also have a cryptocurrency charting platform, which is 150 names or something. And, your most 150 of 500. So for those who want to get a little bit more into the crypto space, that also you can then compare fundamentals and other things. So I definitely recommend
Fun.
Stock Charts. It's not trading platform. It's just I forgot completely to share this as I'm talking about it. It is a charting platform, and they do have cryptocurrencies. If you're interested and you want to find out, I think this is pretty cool. Like Cardano looks really good. We talk about this stuff, but that's one of my 4. Okay, so I'm done. I'm going to close. I'm going to put this back on YouTube channel. And again, just a reminder, it's also a podcast, but you can't see the lovely charts. So
share it on Spotify. Everybody like it.
That's
like
it. Yes, thank you so much. I appreciate your time. And Jonathan, thanks again always. See you Tuesday.
Thanks, everybody. All
Okay,
right.
bye.